Howdy, my friend, welcome to Squirrel on Charts, your resource for advanced trading education. No doubt, the double top and double bottom are probably the most popular price action patterns. They are easy to identify, and you will encounter them quite often. However, there are some mistakes many traders make when trading this pattern. So let me help you become an expert at trading double tops and bottoms. Let's start with a quick recap. The market creates a double top when it makes a high, then pulls back, and later retests that high. But instead of making a new high, the market reverses at the price of the previous high. The market creates a double bottom when the market makes a low, then pulls back up, and then retests the previous low. Alright, let's look at a very important topic. In general, price action patterns can be found almost everywhere and in all sizes. But trading a single pattern without looking at its context is almost always guaranteed to fail. In fact, there are often multiple price action patterns at the same time, each of them giving you different signals, sometimes both long and short signals. So, how do you find relevant double tops and double bottoms? Easy, you look at the context. There are different types of context you can look out for. For example, the current market phase, nested patterns, or some technical indicator. Let's look at double tops and bottoms in different market phases. In my experience, the most reliable double tops and bottoms are part of a trend. These often occur inside a pullback, as you can see on the two pictures below. The benefit with a pattern like this is that you get an entry signal in the direction of the trend. Next, you could also look out for nested patterns. These are patterns inside other patterns. Usually, price action patterns inside larger price action patterns. On the left-hand picture you can see a larger double top. However, both moves of that larger pattern also contain a double top. On the right-hand picture, you can see a big wedge with 3 pushes. At the last push, the market formed a double top, before reversing down. Furthermore, you can use indicators to find double tops and bottoms with a good context. The best choice are band indicators. For example, the moving average or Bollinger Bands. On the left-hand picture you can see the market forming a double top at the upper band of Bollinger Bands. On the right-hand picture you can see the market forming a small double top, right at the moving average, before reversing down. Here is an important concept almost no one talks about. A double top or double bottom is always a failed breakout. The market tried to make a new high or low, but turned at the level of the previous high or low. The picture on the right is a good example of that. At this point you don't know if the market will form a double bottom. Chances are good that the market makes a successful breakout. If you would just enter a long trade, betting on a double bottom, you would take a low probability trade, even when the context is good. So what should you do instead? If you expect to see a double bottom or top, and the context is good as well, then make sure to wait for some form of confirmation before entering. One option for confirmation would be to wait for the market move to get broken. On the left-hand side you are betting on a successful double top. But instead of entering as soon as the second move reaches the high of the previous move, you wait for the market to start reversing. You could, for example, enter as soon as the market breaks through the low of one of the strong previous bullish candles, as shown by the small black lines. The picture on the right-hand side is similar. After the market reached the previous low, it started turning. The next bullish candle was strong enough to close above the high of one of the previous bearish candles, again shown by the black line. The benefit of this type of confirmation is that it does not delay your entry too much. A slightly more complicated method is to look at a lower time frame to see the small trend that leads towards your entry. In the picture below, I have marked the trend with black lines. You could wait for the small trend to get broken before entering a long trade and betting on a successful double bottom. In my experience, this method works quite well. However, if the smaller trend does not look good, or if the entry would be too late, you could just choose the previous method that I have shown you. So, let's look back at the most important things I want you to remember. First, you always need context when trading double tops and bottoms, or any other price action pattern. If you can't find any good context for a price action pattern, it is probably a low probability trade. Second, a double top or bottom is always a failed breakout. Therefore, instead of just entering and risking getting stopped out by a successful breakout, you should always wait for some form of confirmation. Alright, that's it for today. If you want to make the leap from beginner to advanced trader, make sure to subscribe. Good luck on your journey, bye.